You know, there's one thing I learned after years of trading the tape, watching the ticker, and living through booms and busts. It's that the market doesn't care about your feelings. It never has, and it never will. And that's exactly what brings me to today's talk. How I cut my losses in half without changing my strategy. You might remember the previous video on rule that could save your account. That rule was about survival, about keeping your capital intact when everything around you is tempting you to gamble it away. Today's talk is the next step, because once you've learned how to stay in the game, the question becomes, how do you stay sharp without tearing down the very method that got you this far? Now, let me tell you something I learned the hard way, and you probably have, too. The first time you taste a real drawdown, it feels like betrayal. You look at your charts, your indicators, your signals, everything that worked before, and suddenly it doesn't make sense. You start thinking, maybe my strategy's broken. But it isn't, friend. Most of the time, it's not the strategy that fails, it's the trader who breaks discipline. Think about that for a second. Have you ever seen two traders use the same system and get completely different results? One wins consistently, the other keeps bleeding out. Why is that? Because one of them follows the plan, while the other can't stand the heat when the market starts to move against him. The market tests you before it ever rewards you. Now, when I say I cut my losses in half, I don't mean I found a secret setup or some magic indicator. I simply learned to stop fighting my own rules. You see, every system has a rhythm, a pulse, and if you keep second, guessing it, you'll choke the life out of it. I stopped doing that. I stopped tampering with my positions out of fear or greed. I learned to trust my stops, not move them, not stretch them. Do you know what happens when you move your stop just a little lower? Thinking you're giving the market more room. You're not giving the market room. You're giving your emotions control. The market doesn't need room, you need discipline. That's where I started cutting my losses. Not on the charts, but in my head. A trader's greatest cost isn't commissions or spreads, it's hesitation. The longer you hesitate to take a small loss, the bigger it grows. I used to let trades run against me because I believed they'd come back. Sometimes they did, but most times they didn't. And every time I held on, it wasn't strategy, it was hope. And hope doesn't belong in trading. Do you know the difference between a professional and a gambler? The professional cuts the bad limb before it infects the tree. The gambler prays it'll heal itself. That's all it is. Cutting losses isn't about punishment, it's about preservation. Now, here's the strange part. When I started cutting my losses faster, my strategy didn't change one bit. Same entries, same setups, same chart patterns. But my results changed because my execution improved. I wasn't trying to predict anymore, I was reacting with discipline. I wasn't guessing, I was responding. Let me ask you, how many times have you looked back at a losing trade and said, if I just stuck to my plan, I'd be fine? Everyone says it, but few actually do it. Because when that ticker starts printing red, logic goes out the window and instinct takes over. That's when your training, your mental rules, either hold you up or break apart. You remember that rule that could save your account from the last talk? That rule was about not losing big. Well, this one builds on it. It's about not thinking small. Cutting losses in half wasn't about being scared. It was about being smart enough to recognize that smaller losses keep you liquid, flexible, ready for the next setup. Because in trading, flexibility is power. I started watching my charts differently after that realization. I used to stare at price movement like it was a personal challenge. Now I see it like weather. I don't control it, I just prepare for it. I let the market show me what it wants to do, then I move with it, not against it. When the tide shifts, I step aside. No emotion, no regret, no story. Just the next trade. That's what most traders don't understand. They think the goal is to be right, but being right means nothing if you lose money doing it. The real goal is to make money, and that means being wrong small. Every trade is a test of your emotional balance, not your intellect. The market doesn't care how smart you are. It only cares how disciplined you can stay when your plan gets tested. Do you ever notice how the best trades are usually the easiest ones? The ones that move in your favor right from the start. That's no accident. The market rewards timing and patience, not stubbornness. The hard trades, the ones that grind against you, those are the traps. And the more you learn to cut them early, the lighter you trade, the cleaner your book stays, and the clearer your judgment becomes. I learned to treat trading like a business. Every trade is an expense with a potential return. If the cost, the risk, grows beyond the expected return, I shut it down. No emotion, no drama, just a decision. That's how professionals operate. You don't see a shopkeeper keeping rotten fruit on the shelf hoping it'll sell someday. He throws it out to make room for fresh inventory. Why should a trader act differently? Sometimes, I'll close a trade and watch it turn around afterward. That used to frustrate me. Now I let it go. Because my capital is free, my head is clear, and my edge remains intact. The market will always offer another opportunity. It never runs out of them. But your capital and your confidence, those can be destroyed if you cling to losers. And the funny part is, once I started cutting losses faster, my winners grew bigger. My equity curve smoothed out, not because the system changed, but because I stopped interfering with it. I let the law of averages do its job. The strategy already had a positive expectancy. I just had to stop killing it with bad execution. Have you ever noticed that the best traders rarely talk about winning big? They talk about losing small. That's because trading isn't a battle against the market. It's a battle against yourself. Every time you take a small loss, you're buying clarity. You're buying time. You're buying survival. And in this business, survival is what keeps you in the seat long enough to win. Most traders want to double their money overnight. I just wanted to stop losing it unnecessarily. And once I did that, once I halved my losses without changing a single thing in my strategy, I finally started to see what real progress looks like in this game. It's not about perfection, it's about precision. Small losses protect big opportunities. That idea sounds simple enough, but it's the cornerstone of every trader who's lasted long enough to see both bull and bear cycles. The whole game of speculation isn't about making money on every trade. It's about staying in the arena long enough to catch the big, clean moves when they come. You can't do that if your capital's already been eaten away by a handful of oversized losses. Think about it for a second. Every time you take a small, controlled loss, you're not losing, you're paying rent to stay in the game. You're buying time. You're buying clarity. Because markets have seasons, just like weather. You can't force summer to arrive early, and you can't make a trend appear just because you want one. But if you've protected your capital through the storm, you're ready to act when the sky's clear. Most traders never get that far. They drown in the rain. Let me tell you something, it's not the losing trade that destroys accounts. It's the refusal to accept it. The moment a trader decides that a small loss is unacceptable, he's planting the seed for a big one. The market gives you a chance to exit with a scratch, and you decide to gamble instead. You justify it, saying, it'll turn around, or, it's just noise. But the market doesn't care what you think. It only cares about behavior, not beliefs. And that's where the game is won or lost. Have you ever noticed how traders will defend a losing position with more conviction than they ever used to take it? It's a strange thing, but it happens to almost everyone. That's because pride steps in. Pride wants to be right, not safe. Pride wants to prove the market wrong. But the market doesn't argue. It punishes. That's why the small loss is a badge of wisdom, not weakness. It's the mark of someone who values opportunity over ego. Now, let's talk about opportunity for a moment. The biggest profits in trading don't come every day. They show up a few times a year, maybe less. The trend that runs clean and strong, the breakout that follows through, the move that feels effortless. Those are the ones that make your year. But to catch them, you need ammunition. You need to be liquid, calm, and unburdened by heavy losses. That's what small losses buy you, the ability to take the next great trade when it shows up. I've seen too many traders miss golden setups because they were still nursing wounds from a bad position. They're hesitant, fearful, guessing every signal. They say, "I'll sit this one out until I get my confidence back." But the market doesn't wait. It moves on, and so does the opportunity. Protecting your capital through small losses means you don't have to rebuild before you can act again. You're always ready, mentally and financially. You remember the previous video on rule that could save your account. That principle was about not letting a single trade ruin you. Well, this ties right into it, because protecting big opportunities starts with making sure no small mistake becomes fatal. When you limit your losses early, you're not just defending money. You're preserving momentum. You're keeping your emotional balance intact, and that's what allows you to see clearly when the next setup appears. Let me ask you, how many times have you taken a loss so big that it clouded your thinking for weeks? It changes your posture, doesn't it? Suddenly you're trading scared, or worse, you stop trading altogether. That's what happens when you treat small losses like disasters. You lose not just capital but confidence, and that's harder to earn back. But when losses are small and routine, they don't sting. They become part of the process, like paying for gas to get somewhere worth going. In my own trading days, I started to see a pattern. The trades I managed well, even when they lost, always gave me strength. The ones I mishandled, even when they won, drained me. There's a kind of discipline that builds when you can take a small hit, close the book, and move on without hesitation. It sharpens your instincts. It keeps your mental capital as clean as your financial capital. Because trading isn't just about the dollars, it's about the mindset that earns them. The chart doesn't care about your feelings. The ticker has no sympathy for your hopes. But it rewards the man who plays defense as skillfully as offense. Every small loss you take with control builds the foundation for your next success. It's a lesson the crowd never learns. They're always chasing perfection, trying to avoid any red on their ledger. But the professionals know that red ink, used wisely, is part of the blueprint for survival. A trader who fears small losses ends up guaranteeing big ones. It's that simple. When you hesitate to pull the trigger, you're saying your pride is worth more than your portfolio. When you hold on, just a little longer, you're trading discipline for hope. And once hope takes over, the market owns you. That's why small losses are more than numbers. They're decisions. They're acts of self-preservation. Picture this: two traders, same setup, same signal. One cuts his loss quickly when the move fails. The other holds, waiting for it to recover. The first trader's free to move on, his capital intact. The second is now emotionally chained to a dead position, watching it erode both his account and his focus. Who's in control there? Who's ready when the real move appears? You already know the answer. In trading, opportunity is like oxygen. You can't see it, but you can feel when it's gone. Small losses keep that oxygen flowing. They keep you breathing when others are suffocating under the weight of denial. The market doesn't demand that you be perfect. It only demands that you protect your ability to act. That's what small losses do. They preserve freedom, flexibility, and focus. And once you start seeing losses as the cost of staying alive in the market, everything changes. You stop panicking, you stop blaming, and you start operating like a professional. You realize that every time you take a small loss, you're simply stepping aside, clearing space for something better. Execution, not prediction, drives consistency. That's a truth I had to learn the hard way. Every trader starts out believing that the secret lies in finding the perfect signal, the magic formula, the hidden pattern no one else can see. I used to chase that too. I thought if I could just predict where the market was going next, I'd finally master it. But over time, I learned that predicting the market is like trying to predict the weather by staring at the clouds. Sometimes you're right, but more often, you just end up wet. What really matters is how you act when the rain starts falling. Execution is what separates a professional from a dreamer. Anyone can draw a line on a chart and call it a setup, but not everyone can pull the trigger when the moment comes, or walk away when it's wrong. The market doesn't pay you for being right. It pays you for following your plan. And yet most traders spend their entire careers trying to guess the next big move instead of perfecting how they respond to it. Have you ever noticed how the moment you think you've figured out the market, it finds a way to make you question everything? That's because the market feeds on uncertainty. It thrives on confusion. The tape moves to shake out the weak hands, the emotional ones, the ones who believe knowledge alone will save them. But knowledge without execution is useless. You can read every chart pattern in the book, study every candle, memorize every indicator. But if you can't act with precision and control, it means nothing. When I finally stopped trying to predict and started focusing on execution, my trading changed completely. I realized that my edge didn't come from foresight. It came from discipline. I began treating each trade like a business decision, not a fortune-telling experiment. If my system gave a signal, I took it. If it failed, I cut it. No stories, no excuses. My job wasn't to be a prophet. It was to be a professional executor of my own plan. You remember the previous video on rule that could save your account. That principle was about survival, about not letting one trade destroy you. This ties directly into that. Because consistent execution is how you enforce that rule. It's what keeps your risk small and your longevity intact. Without it, even the best rule becomes a line of text in a forgotten notebook. Most traders think consistency means having a high win rate. It doesn't. Consistency means showing up every day and executing your edge the same way, no matter what the market's mood is. You can lose half your trades and still grow if you manage them right. You can win 9 out of 10 and still go broke if you manage them wrong. It's not about the outcome of one trade. It's about the process behind 1,000 of them. Execution builds that process, prediction destroys it. Do you know why prediction feels so addictive? Because it feeds the ego. It feels good to be right. You post your chart, price hits your target, and you feel like you've cracked the code. But what happens the next time you're wrong? You hesitate. You overanalyze. You wait for confirmation that never comes. You stop executing. That's how traders lose their rhythm. They start trading their opinions instead of their plan. The best traders I've met never sound certain about anything. They don't know what will happen. They know what they'll do if something happens. That's execution. It's the ability to respond with clarity, not react with emotion. They operate like soldiers. Plan the battle, follow the orders, adapt when the plan fails. There's no drama in it, no guesswork, just discipline and reaction. I used to believe the key to success was predicting when a trend would start. But now I know the key is acting decisively once the trend is already moving. The market leaves footprints. Volume spikes, clean breakouts, orderly pullbacks. And your job isn't to predict those footprints, it's to recognize them in real time and execute. That's why chart reading isn't fortune-telling, it's observation under pressure. Have you ever watched a trader freeze when his setup appears? It's not because he doesn't see it. It's because he's trying to confirm it one more time, waiting for certainty that never exists. That moment of hesitation costs him the edge. Then, when the move runs away without him, he chases it, breaks his rules, and ends up losing twice, once in capital, once in confidence. Execution cures that hesitation. It teaches you to act when the conditions align, not when they feel comfortable. The market rewards those who can act quickly and exit cleanly. It punishes hesitation and overconfidence equally. When you execute with consistency, your results smooth out. Your emotions stop running the show. You stop caring about being right and start focusing on following through. That's when trading turns from chaos into rhythm. I remember a stretch early in my career when I was obsessed with predicting reversals. I'd study charts for hours, waiting for the perfect moment to call the top or bottom. Sometimes I caught it, but more often I got crushed trying. Then one day I asked myself, what if I just waited for the move to show itself and focused on executing my plan instead? From that moment, everything slowed down. I wasn't fighting the market anymore. I was flowing with it. It's funny, people think execution is mechanical, but it's actually emotional discipline disguised as logic. You have to train yourself to act without flinching, to cut losses without regret, to let winners run without interference. That's the part prediction never prepares you for. Prediction feeds your imagination, execution tests your nerve. Every time you execute well, even on a losing trade, you strengthen your edge. Every time you hesitate, you weaken it. That's why I always tell new traders, stop trying to be right and start trying to be consistent. Consistency comes from how you behave in the market, not what you believe about it. Execution is the muscle memory of a professional trader. It's the invisible work, the part nobody sees on social media or chart screenshots. It's the quiet act of following through when you're scared, uncertain, or tempted to break your plan. That's what builds real stability. Because in the long run, the market doesn't pay the trader who predicts best. It pays the one who performs best under pressure. And once you understand that, you stop chasing forecasts and start mastering behavior. You stop guessing and start reacting. Being wrong small is more powerful than being right big. That's one of those lessons you don't learn from books. You learn it from the market's teeth. Every trader, sooner or later, learns what it feels like to be right but broke. To have called the move, predicted the turn, nailed the chart, and still lost money. That's when it hits you. This game isn't about being right. It's about managing how wrong you are when you're wrong. You see, the crowd chases the glory of accuracy. They want to brag about catching the bottom tick or selling the top. But the professionals don't care about that. They care about exposure, about control, about how much capital is still alive to fight the next round. The amateurs aim to win arguments. The professionals aim to survive. And that's why being wrong small is the foundation of every lasting fortune in this business. Have you ever noticed how the biggest losers in trading are often the smartest people in the room? It's because intelligence can trick you into stubbornness. You convince yourself that your analysis must be right. You argue with the market, thinking logic will eventually prevail. But the market doesn't speak logic. It speaks price, and price has no loyalty to your thesis. The market can stay irrational longer than you can stay solvent, as they say. The difference between losing small and losing big is how quickly you admit that. When I first started, I hated being wrong. I'd hold losing trades just to avoid facing that feeling. I'd widen my stops, justify every move, tell myself the setup was still valid. It never ended well. I wasn't trading the market, I was trading my ego. But once I learned to take small losses like a surgeon, quick, clean, without hesitation, everything changed. Suddenly, being wrong didn't feel like failure, it felt like strategy. I was defending my capital the way a general defends his troops. That's what most traders don't understand. A small loss isn't an error. It's a maneuver. It's part of the campaign. You don't fight every battle to the end. You retreat to fight another day. That's how you win wars in the market. The traders who blow up their accounts aren't the ones who take small losses. They're the ones who refuse to. They turn a paper cut into an amputation because they can't stand the thought of being wrong. You remember the previous video on rule that could save your account. That principle was about preventing one bad trade from destroying you. This is the other side of that coin. It's not just about avoiding ruin, it's about turning every small loss into an asset. Because when you keep your losses tiny, you're buying freedom. You're keeping yourself liquid, agile and ready for the next setup. Think about it like this: if you lose 50% of your account, you need to make 100% just to get back to even. But if you lose 2%, you only need 2% to recover. It's math, not magic. The smaller your losses, the easier it is to climb back. That's why small losses aren't setbacks. They're the cost of staying in business. Have you ever cut a trade early and watched it turn back in your favor afterward? It stings, doesn't it? But that's part of the game. You can't measure success trade by trade. You measure it across a lifetime of consistency. The trader who cuts small losses and misses a few rebounds will still be standing when the reckless ones are gone. Because markets reward longevity, not perfection. The funny thing is, once you accept being wrong small, you start to see the market differently. You stop needing to predict every move. You start focusing on reaction instead of conviction. You realize that trading isn't about proving you're right. It's about proving you can stay calm when you're wrong. And that calmness, that steadiness, becomes your real edge. Most people underestimate the emotional power of small losses. A small, controlled loss doesn't disturb your balance. It doesn't shake your confidence. It keeps your mind clear and your judgment sharp. A big loss, on the other hand, clouds everything. It infects your decision-making. You start seeing ghosts on every chart. You hesitate when you should act, and you act when you should wait. One big loss can poison months of discipline. That's why every pro trader is obsessed with cutting them small, not just for the capital, but for the clarity. You can tell a trader's experience level by how they handle being wrong. The beginner takes it personally. The intermediate blames the market. The professional shrugs, logs it, and moves on. The market isn't a courtroom, it's a weighing machine for discipline. Every trade weighs your ability to control risk against your need to be right. The smaller your losses, the more control you have. There's a kind of quiet confidence that comes from mastering small losses. You stop fearing the next trade because you know nothing can hurt you badly. You stop chasing because you know you can always wait for better conditions. That's when you start playing offense, not with prediction, but with patience. You become a sniper, not a brawler. When I look back at my own records, the difference between my early years and my later success wasn't the strategy. It was the scale of my mistakes. My wins weren't much bigger, but my losses were much smaller. That's what flattened the equity curve, what smoothed out the chaos. Because when you keep your downside under control, the upside takes care of itself. There's another thing small losses do. They keep your ego humble. Every loss, no matter how small, reminds you that the market is the boss. It teaches you respect. It keeps you from getting careless when you're on a winning streak. Big winners often create overconfidence, and overconfidence leads to oversized bets. But when you're used to managing small losses, you build habits that protect you from yourself. Ask yourself this: would you rather be right once and win big, or be wrong 100 times and still grow your account steadily? Most traders pick the first. Professionals always pick the second. Because the second trader controls his destiny. The first one depends on luck. Being wrong small gives you the most valuable edge of all, staying power. You can weather losing streaks without emotional breakdowns or account meltdowns. You can trade through bad conditions without panic. You can think clearly when others are desperate. That's what separates the survivors from the casualties. A trader's edge lies in consistency, not complexity. That's one of those truths that sounds too simple to be valuable, which is why most people ignore it. They think the answer must be hidden behind some advanced algorithm, some exotic indicator, or some secret the pros don't want to share. But the truth is, every great trader I've ever known made their money doing something simple, and doing it the same way over and over again. The difference wasn't in their method, it was in their consistency. You see, the market rewards repetition, not reinvention. The more you change your system, the less you understand it. The less you understand it, the more likely you are to abandon it right when it's about to work. I've seen traders jump from one strategy to another, like gamblers switching tables in a casino, hoping the next one will finally pay out. But the market doesn't work that way. It rewards those who stick around long enough to truly learn their edge. Its rhythm, its drawdowns, its strengths, its limits. Have you ever met a trader who's been at it for years and still can't find stability? That's usually not because they lack intelligence or skill. It's because they lack consistency. They're always tweaking, always testing, always trying to outsmart the system they haven't even given enough time to prove itself. The best traders, on the other hand, find something that makes sense to them and then commit to mastering it. They treat it like a craft, not a guessing game. When I first started, I was guilty of the same thing. I thought the more complicated my charts looked, the smarter I'd become. I had every indicator you could name: RSI, MACD, Fibonacci lines, Bollinger Bands, and 3 moving averages just for good measure. My screen looked like a Christmas tree, And yet, I couldn't trade to save my life. I was drowning in data but starving for clarity. It wasn't until I stripped everything down to price and volume that I started to see the truth. Complexity was my disguise for inconsistency. Consistency is about repetition under pressure. It's about doing the same thing when it's easy and when it's hard, when you're confident and when you're scared. Because that's what builds trust. Not in the market, but in yourself. Every time you follow your plan exactly as it's written, you strengthen that trust. Every time you break it, you weaken it. And trading in the end is a game of trust. Not faith in the market, faith in your own discipline. You remember the previous video on rule that could save your account. That principle was all about survival, about keeping your capital intact when emotions threaten to ruin you. Well, consistency is how you enforce that rule day after day. It's not enough to know the right thing. You have to do the right thing, again and again, until it becomes reflex. That's how professionals operate.